me now to talk more about it from Boston is Jason Blackwell. He's a chief investment strategist at Focus Partners Wealth. Jason, good to have you on the show this morning. Joining us just a little north of the New York Stock Exchange here. What is your take on the position of equities with that jobs report on tap tomorrow?
Yeah, thanks, Kristen. I think one of the things, and I'll actually step back, what a fantastic lead up. You were talking about the AT&T, this 125-year company that has persisted through all of the technological change. We see glimmers of that in many of the companies that are in the S&P 500 today, but for the next leg of the technological change. And we have a lot riding on this AI theme. But one of the things that's really important to us is to take down some of the concentration risk on the theme and really focus in on quality. Focus in on those companies that have strong profitability, that have high earnings quality, and high margins. Mm-hmm. And so similar to the ETF that's ringing the bell today, that's an area that we've really been focusing on for client portfolios as a way to bring down some of that concentration risk.
In terms of sectors and or specific names that represent quality to you, Jason, what more can you share about what looks attractive in this market?
Yeah, I think you find a lot of it in the tech sector, but you find a lot of it in other areas as well. And I'd even, kind of stretch and talk a little bit about your most recent segment. I think there's a lot of opportunity within what were otherwise fairly sleepy utility or power producer, think value names that have really created a growth story around some of the power generation. And so I think you can find that quality really across sectors and across market caps. Mm-hmm. And the key is just making sure you stay diversified and you're focusing really on what is their earnings power.
Yeah, we've seen the jobs market slow down quite considerably, certainly with the data that's come out over the summer, and this does precede that non-farm payrolls report for August that we'll get tomorrow. But ADP this morning disappointing as well, at least coming in below economists' expectations. How does that impact the path forward for interest rates from your view?
Yeah, and I'll start out by saying I don't put a whole lot of credence on the ADP report. It doesn't always provide us a great predictor of what we're going to see in the results, but clearly expectations have lowered. We've had a couple of bad prints and poor revisions on the official numbers. I think that's opened up the Fed to where we can be looking at a 2 to 3 rate cut scenario. But if I were to think about where could the consensus be wrong, is it more likely that we are overestimating or underestimating the number of rate cuts? I think there's probably more likelihood that we're overestimating. Any sort of major positive surprise tomorrow in the official numbers isn't going to sway the Fed from their September decision, but I think it does change those odds as we look into future meetings this year.
Yeah, so of course when it comes to the employment report, maybe tomorrow, according to your insight here, is not necessarily going to sway the Fed's decision, but what could it mean if we do get a better than expected number? I think that might be something that the market could be surprised by.
Yeah, I think and the bar is set fairly low on the expectations for tomorrow's number, and so it seems like a fairly easy number to beat. And if you get a significant beat on that, again, I don't think it changes the odds on what people are expecting for a September cut, but it probably does lower the odds as we move further into the year that we see successive cuts. And you could very well envision a world where you have a on again, off again Fed that cuts one meeting, pauses, waits for the impact, cuts the next meeting. And I don't know that is fully priced in as a scenario in the market.
Yeah, it'll be a bit up until October that we get more earnings reports, but tariffs continue to be a factor that I think the market is following here, and uncertainty might still be the name of the game there in terms of how this tariff impact is going to play out over time. What are the most important pieces of the tariff scenario to investors that they need to know about?
I think we're at a point at this where the worst case scenarios are behind us, right? If we think back to where we were looking at tariffs back in, April, we were looking at much higher rates on many more companies, many more products. what we've seen is a ratcheting down, and could you see some of that ratchet back up potentially? But I think between the court cases, between negotiations, et cetera, I think you continue to see that come down, and what that allows is companies to do what companies do, right? Which is adapt to the market environment they have, adapt to the economic and legal environments that they have, and I don't think that should really impact how you're thinking about investing for the long term, because you're really betting on the adaptability, not on what the tariff rate is.
Jason, great to have you. Thanks again for joining us from Boston this morning. That's Jason Blackwell. He's a chief investment strategist at Focus Partners Wealth. All right, thanks again to Jason.